All right. Hey, good morning, everybody. It's Wednesday, October 17th, 2018. British inflation, meh. European inflation, nah. How big? We got FOMC meeting minutes. It's going to be a good day. So let's go. Yeah. All right. So the other thing that's going on in the Asian session today, tonight, tomorrow, whatever it is for you, for me, it's tonight. Aussie jobs. Right. What a great trading day. So anyways, British CPI headline, a slight miss, core, a slight beat. Yeah, that's about as expected, which is fine. It's all good. No crisis going on there. Wait. And then in Europe, as expected. So that's all good. But yeah, today the meeting minutes, this is very important because we're not just looking at, will the Fed raise interest rates, but how long will they continue to raise interest rates, or I guess in this case, how high will they raise interest rates? So we need to figure that out. But also the velocity. Will they speed up the rate at which they're raising interest rates, or will they slow it down? So for example, instead of every other meeting, what if it was twice a year instead of 4 times a year? That kind of stuff, right? All this stuff is uber important, and everyone and their grandmother is going to read FOMC meeting minutes today. And then, of course, the Asian trading session. Always good, always in style. So that's what's on today. So thank you for coming to the Forex.Today YouTube channel. Please click there to subscribe. Do the little bell thing, because what happens is when I hit stream, you will be notified and it'll say, hey, if you have the time and would like to join, all you have to do is click. And then boom, brings you right into that webinar. You don't have to go to like YouTube and then find our channel and then find the live stream. And it skips about 5 different steps and just makes your life easy. So go ahead and do that. I like the likes. Would you leave me a like? Also, if you're watching a recording, please leave in the comments section of the recording your questions. Like, for example, will I cover a particular pair? Will I cover a particular topic? I'd love to do that for you. All right? So just do all that kind of stuff. So thank you for that. Also, would you please visit tradersway.com? By the way, hi, my name is Wayne McDonald. It's a little dark in here. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for tradersway.com. So I am here to try to do my best to make you a better currency trader. Simple enough. I'd like you to become disciplined, independently thinking, meaning you do your own research. I would like you to have a business mind focused on the long term, proper risk management, proper trade planning. And I'd like you to do this for years and years and years to come. Okay? Now, in exchange for doing all that for you for free, it would be fantastic if you paid it back by visiting tradersway.com and opening a demo account now. And when you're ready and you have the skills to trade real money, that we're hoping you will choose Traders Way as your prime brokerage firm for your successful Forex trading business. So what you can do now is practice on their MT4 account, get used to the execution speed, get used to the spreads, maybe contact our customer service and see the foundation that we've built for you. So please visit Traders Way. With that, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, here we are. We're on the beast We're on the Widowmaker. Volume is low today. Oh, is that Ray I haven't changed anything. Probably try the little YouTube volume or something. I haven't changed anything, so it shouldn't be me. Where's your coffee? I'm drinking yesterday's coffee because I'm a baller. I'm studying. I have a real estate development exam. I got to study that. Yeah, Ricardo, corn laws, right? I got to study that. 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 So I've been up and I got lots of coffee. So I think that's actually yesterday's coffee, but whatever. That's what I do in my free time, yo. So anyways, going back to this, is it rolling over? What's your opinion, right? Don't answer. It's a rhetorical question. Okay. Okay. I think the better question is, are we at support resistance now? You know what I mean? So not like were we here, were we there, all this kind of stuff. Are we at support or resistance now? Like, for example, would this be a good place for a bear to sell? No, of course not. What is the other question I asked you to start asking? The other question I asked you to start asking, and I think I did this on Monday, and it's what, Wednesday now? Where are we going? Resistance, 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 lower low, lower high, la la la. That can change a lot, huh? So if you were a bird, you might be thinking down, huh? Lower low, lower high. Okay, oops. Didn't mean to do that. That's a classic rollover. In fact, if you have my book from a million years ago, I almost have that exact chart in the book as far as breakout, retracement, and down. The target for such a move would be quite a ways down here. And my problem with this is I don't want it to do it. So I have a bias, which is a filter. And sometimes it works for you. Sometimes it works against you, right? I don't really want to, right? James Dustin just logged in and is spamming us for his binary strategy for binary Forex strategy on a dude. Get out of here. Amazing. Goodbye, Jamie. Wow, lots of scammers now, huh? People log in and want to spam. Amazing. So anyways, up, consolidation, down is the next road. I don't want it to go down there. So it's like one of these things, like if I was just a machine, maybe I decide I just want to sell that. And I'll say, look, it's just bearish. Okay. I've found that it ruins my consistency on the long time because I guess I don't have a consistent strategy, right? If my consistent strategy was only up, then I'm simply like buy at support, buy at support, buy at support, right? Or sell at resistance, sell at resistance, sell at resistance. And it's very consistent, and therefore I probably get consistent results. Versus, should I sell here? Should I buy it there? And all this kind of stuff. I mean, we know it's moving sideways now because we could see it, but we didn't know here or there, right? So I'd rather like buy it. Whoa, what's this? Buy it, but be cautious and then realize we're going into consolidation. Anyways, now it looks like it wants to come down. Technically, fundamentally, I don't want that to happen. Okay. What is the significance of the midpoints? You'll love this, Coda. They're in the middle. So, right? So let's do an example. You're going to love it. Okay? This is S1. Let's do it this way. This is S1. This is S2. That's the middle pivot, and it's equidistant from S1 and S2. That's it. They're the middle. All right, cool. So anyways, yeah, pound yen wants to come down, but if I'm a bull, I'm going to say, well, I'll skip it or let it prove to me, right, that it doesn't want to fall. So right now it says, you know what, take a break. Take a break. Maybe we need a good FOMC or something, right? Euro yen, well, Euro's got its problems, okay? And again, a bull would buy, 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 but at some point you might want to take a break. Now, if you recall from previous plans, we had a plan A monthly swing sell up here at 132.50, and that's set up with a quadruple top at 133, I guess it is, right? So 132.50, right? And now we're at 129.50. So 300 pips down. But notice this consolidation, and it's similar to this. Like if you're a bull, you would have bought this, and then eventually it would have got knocked out. And if you're a bull in here, you were really disappointed. Remember how I made a big stink about, it wasn't quite the right pivot, and maybe it's gonna like bounce off of this. Well, it never really did bounce off of this, but you might have bought one of these if you're a bull, never got your breakout. And of course, bears, look, roll reversal, it's all there. Roll reversal, right? Lower, high, low, low, and it hasn't really worked for you either. But the most important thing is if you bought down here, you're okay. You're not making money. If you sold sort of higher, you're okay. You're making a little bit of money, but there's not a lot going on. And if you did your job right, you're not facing too much risk, right? Oops. I guess I'm going to kill that EMA. Let me kill that. Right, so it's like if you're still a bear, you still have trades here. And in fact, this one is earlier than these ones. Maybe that's a sign. I got the sign and it opened up my eyes, right? So you can see here was this sort of like second wave here. And what do we call that? We call that a weekly swing trade. Is that crazy? The monthly swing trade, guys, was sell here, let it drop, what was it, 500 pips? This week's trade plan, last week's was here, was sell at near the central. A little more difficult, but this one is right in there. Okay. This is the weekly swing trade. Sell in there. Oh, you mean like that? And notice you'll say, well, which one do you take, Wayne? Let me see if I can draw this. Higher high, higher low. Sell? No. Higher high, higher low. Sell? No. But you could have sold high at resistance at 130. 130. Yeah, Captain Obvious, right? Anyways, higher high, higher low. Sell? No. Lower high, start to drop, bearish engulfing candles. Sell? Maybe. Let's continue the move. Lower low, after a lower high, sell? No. Retrace back to the psychological level. Roll reversal. How do you know it's a roll reversal, Wayne? Oh, well, this support became resistance. Sell? Hell yeah. And gone. That's just price action. So once again, like if you're looking for a course at boot camp, price action is going to teach you that. Okay. Now, I have to preface this like I do every time. The price action isn't putting you into a trade. You're not looking for price action for answers. You're looking at price action for entries because you already have a strategy. You looked at the higher time frames and you said, well, on a monthly basis, I believe we're on a bearish move on the way down to the monthly M1, as indicated by this. And now we're we spent a week of consolidating, right? And now I'm looking for a swing trade down. Oh, I got my swing trade entry. So now you're bearish. Now you're in a swing trade zone for the week. So now you got a weekly target and a monthly target. What's your weekly target? M1. And now you need some price action up there to prove that this second now level of resistance is holding. So we retrace up. So retracement. So now you're selling high, lower high, great, right? Lower high of this high, but then, right, big retracement, lower high of this high, then lower low, lower high. Like, wow, at some point it's not a slap in the face. You're being hit by a freight train. But if you don't have a trade plan, you could totally miss that. Right? So like if you're on my swing trading team and you're a Euro Yen bear, there's no way you'd miss that. None. Absolutely impossible. Unless you were not looking. Like you're like taking the week off or something. But if you're a bear on the Euro Yen, I'm not saying you should be, by the way. But you just have to, just if you are. Right? And then you'll say, well, Wayne, how do I do that? Well, long-term technicals, fundamentals, or flip a coin. Bear, Euro Yen till the end of the year. Done. But once you get to that point, you got it. Now, bulls, are there good entries for bulls? Well, the only thing you got is this, and it's not that great, especially since the other wasn't great last week, and especially since it looks like the trade plan currently is bearish on a monthly basis. Remember, we started this, I don't know if it was last week or the week before, but you start your questions, where are we going? Another way of saying that is, well, it's not even market bias. It's like, what is the market trading? Somebody sold it right at monthly M3, so we know we're going to M1. Stuart says, so when markets are trading against you, no, it's not that you're wrong. So here, let's go to this. Stuart says, when the market is trading against you, what's the best thing to do? Not to change your mind because you're wrong. Oh, you're not wrong. Fundamentals are way outside of technicals. Fundamentals are sort of they're a bigger question. Okay, they're just a bigger question. We'll push that aside for a second. Technicals just show you whether the market participants are buying or taking profit or selling and taking profit. Okay? Now, you can have periods where it looks like technically, especially when you're on a 15-minute chart, you're like, oh my God, this thing's been coming down for days, weeks even. Doesn't necessarily mean that that's the fundamentals. That is, you're using technical analysis to analyze, well, what are market participants doing right now? So just because it fell here didn't mean necessarily people were selling. There's a high probability it was people taking profit. Okay? So what are you, as a trader now, most concerned with, Stuart? Now, you're going to say, well, making money. Well, you're supposed to always make money. Let's beyond that. That's like, what's your number one goal in life? Breathe air. Well, yeah, okay, beyond breathe air. Eat. Okay, besides breathing air and eating, reproduce. Okay. How about, is there something bigger in life you want to do? Poop. Right? So, yeah, okay, you want to make money. What you want is low volatility, consistent results, and low drawdowns. The best way to do that is through your behavior, because behavior is what gives you the results. If you're just buying and selling, buying, selling, buying, you're swinging both ways like a broken gate. You're not going to have a good idea of where we're going, where we've been. And you could probably do well on the short term, but on the long term, you're just not. So it's better to say over the next or let's say over the last 2 or 3 weeks, market conditions have not been favorable to your strategy. Okay. And then when the market conditions change, you will be ready, willing, and able to execute your strategy, and you will do very well. And when the market conditions are not quite favorable, or even against you, as you said, you either don't get any trades or you get small trades, right? Well, what does that do to your volatility? Keeps your volatility low. Okay? So that's the road. So an amateur says, Wayne, I got to make as much money as I possibly can. I need more money. And they'll say, what's your strategy? And you're like, well, I don't really know fundamentals. It's all hogwash. So I'm just pure technical, man. Price is everything. I just got to go trade. Let's go. And I'll say, oh, great. See you in 20 years. I hope you still have this attitude and you're doing super, super well. But I doubt it. Okay. And then ask yourself, what does a professional hedge fund manager sound like? You say, well, yeah, right now we're looking at global macroeconomics and we're looking at our decisions. We're taking advantage of this, taking this central banking policy, and we expect the Fed to do this over there. And, a little bit more than 15 minutes of fame and, yellow Lamborghinis. The whole yellow Lamborghini is so funny. There was a time before the financial crisis, not probably close to it though, probably about 2006, 2007, American Express called me up and they're like, hello, Mr. McDonald. First of all, we value your membership since 1994. How are you doing today, sir? I'm like, yeah, I'm going to hang up now. They're like, wait. If you increase your spending on your credit card by this amount, we will give you a lease on a Lamborghini Gallardo for free. No joke. I'm like, a Gallardo? Click. But, your yellow Lamborghini should be like free or pointless. Anyways. So how do you want to treat this one? This one is different, huh? This one is different, right? So we looked at pound yen, looked very, very bearish, or like turning bearish. We looked at euro yen, definitely bearish. And then we look at CAD, and this one is trickier. But maybe it's an opportunity, maybe it's a threat. I don't know. So, where are we going? Is it the same setup? Well, first of all, it was significantly more bullish than, let's say, like euro yen, right? Like we were way up here. Are we playing off the M3? No, it's not a swing trade short. Kevin wants to know, what kind of car do you drive? I don't own a car, actually. I just bought a golf cart. Oh, it's going to be too long. I don't have time for this. I just bought a really kick-ass, super fancy, hot rod, souped up golf cart I got oversized wheels with low profile tires on them, and stereo system and custom paint job and custom seats and whatever. So yeah, I drive a Yamaha G29 Drive. Boom. Electric. Yeah, I'm electric. I don't want to drive a Tesla. I drive a Yamaha. So anyways, there you go. Yeah, car. First of all, it's the dumbest way you could possibly spend your money. So if you, right, whatever. Don't get me going on these things. All right. So checking this out, right? We're not in a short move, but we are in a yen move. Okay. Now, because of what we're looking at, these multiple currency pairs, we're getting an idea of individual strength versus the yen. So the common denominator has been yen, yen, yen. So I can tell you CAD is stronger than pound, and pound is stronger than euro. Okay? Right? Okay? You see what I mean? So when the yen weakens again, CAD will move first, then pound will move second, and then maybe euro doesn't even move at all. Okay? But notice where we are setting up. So put that in mind. Bulls are waiting to go long on this one before they go long on the other ones. And where are we finding support? Remember how the other pairs were sort of like near M2-ish? But they set up off the M3, which makes it very bearish because it's not just that bulls are maybe taking profit, but bears are definitely selling. Well, I look at this and I don't see anything that says bears are definitely selling. I can see that the market's moving down, but not necessarily bears are selling. We just know the yen is stronger than the CAD, which are two different things, right? And now that we're sort of consolidating, this is consolidating at exactly the right price, where the other ones were sort of like, yeah, sort of neighborhood-ish, right? So this is interesting, okay? So you can see all these arrows, and all these lines are saying, hey, maybe up, maybe up, maybe up, maybe up. Also, we need oil to move up, right? And remember how the stock market was crashing and oil was falling and everyone's like, you remember somebody asked me like something about the stock market crashing? And I poo-pooed on that, and I spent like maybe 20 minutes telling you why it's not a stock market crash. It's a rebalancing issue. And so once our portfolios will rebalance in a very short term, everything will come right back, and things like, the stock market will go up, but also, demand for commodities will return and all this kind of stuff. Anyway, so that's happened. Right? Yeah. And now I read headlines like, it was the biggest one-day rally since March. And I'm like, I know. Hello. So anyways, going in here, this is exactly what you want to see if you're a bull and you're drinking your own Kool-Aid. That's fine. Because that's confirmation bias, but at least you have a bias, right? So bottom, 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 bottom. Okay? And it's a monthly, but it's also a weekly. So this move here goes back to last week. I don't know if you're going to see this very well. Can you see this one? This mini one? This was us front running last week, and I think it was Thursday, not even Friday. Okay? Let's see if I can zoom in there a little more. Okay, this one here. Okay? Then plan B was let it come down and bottom here on Monday. Okay, so Friday's trade was up, down, buy Friday. Monday's trade was buy here off this bottom. Okay, and then that's what these are. Okay, and so now what we have is higher high. Why do I have this here? Because after double bottom higher high, you want to buy a retracement if you're a bull. And you're going to look first and foremost to something here. That's yet another plan A, right? Plan A for today. This is plan A for Friday. This was plan A for Monday. Here's plan A for Wednesday. And then plan B, that's like a 786. And nobody wants a 786. Nobody plans on a 786. Oh, my pleasure, Kudzi. Black Falcons 20. I suck at Forex. Need to get smarter. Well, Black Falcon, hang out with me every day, and we'll blood, sweat, and tears for years. We'll get you fixed. I've been doing this every day for 15 years. I'm a little bit better than I was in my first year. Okay. Yeah, well, that's how you look at it, right? You know, I don't want glasses. Get it. So plan A, plan B. Okay. So anyways, going back to Black Falcon, hey, I would pick one thing that you know you suck at a lot. Just one thing. Like, make it simple. Price action, let's say. And master that. Maybe take the course, maybe do some reading, buy someone else's book. I don't know. But I would really isolate what I'm working on. So like if it was golf and you sucked at golf, I would work at putting. I would work for like a year. I would putt. Every day I'd spend an hour putting. And in less than a year, I'd be a pretty decent putter. Okay? That's how I'd work it. Right? So if I can get on the green, I got this. I'm going to two-putt it or less. And then I'd work on driving, because even if your approach shot is awesome, I mean, if you keep hitting it in the woods, you're never going to get on the green. So I would then drive where I don't have to drive far, but I want to hit the fairway every time. And then I can sort of have a terrible second shot, but eventually I'll get it on the green, and I'm going for a one putt, right? So anyways, I don't know, work it out. Isolated is all I'm saying. Kevin, you found some old webinars and stuff. You know, like there's a couple of like when I'm speaking at conferences and stuff. Yeah, I look like a teenager. So, anyways, so that's that. That's this week's move into this month's move. Remember, I'm only really pointing at R1. I'm not even pointing at the true top here. We need to get above this before I'm actually technically bullish. So you can still buy because I'm fundamentally bullish, but I'm going to buy and be conservative, right? Because if I buy here and I'm aggressive, let's say I put a bigger lot size, and no matter what, I'm long, so I'm going to have a big stop. Well, what are the odds that something like this happens? What are the odds something like that happens? Probably better odds than it going up. How do I know that? Well, we still haven't made a higher high relative to this high. We've only made a higher high relative to that high. And then once we get up there, we're still lower than this low. So we're not, a trend might be born, but we're not quite there yet. So there's levels of risk. So that's why I'm not projecting higher highs, because we haven't made a higher high there. So why would I be that confident? You see what I mean? Well, Kudzi, once again, I tried them. Well, I fired the programmer, by the way. I fired her. But I tried them yesterday with Chrome, and some people are like, it doesn't work in Chrome. And then I did it in Chrome. I got all three every time. I got all three, and they all downloaded. So once again, I don't know what it is, but I fired the programmer because she couldn't figure it out. And I'm hiring a new programmer, and he's working on it right now. instead of wasting time figuring out, he's just going to rebuild it from scratch. Okay? He's going to rebuild it from scratch, and we're going to use something different than MailChimp, which, is in the business of 100% of the time sending you emails. So you're not getting the email. So I'm basically firing MailChimp. I'm firing the programmer. There's dead bodies all over the place. And we're rebuilding it from something from scratch and getting a different thing to make sure that you get the email. And if that doesn't work, there is no other solution. Okay? Yep. So we just you gotta bear with me, guys. Okay? But it's like one of these things, like you should put it in reverse context. Let's say if 100 people in a row got it, no problem, and you come along and it doesn't work for you, I don't know. But I'm trying to get it done. Okay? I'm trying to get it done. Dead bodies everywhere, burning money in a fire pit, but I'm doing my best to get it done for you. Okay? Just give me time. People are working on it. People are working on it right now. Okay, Kiwi. Okay. So, is this different from the other charts? Okay. What did pound, right? What did pound yen look like? What did euro yen look like? What did CAD yen look like? Is it different from this? And if so, how? And then, what does it mean? Well, where did we start the month? Where were we going? If you were bear, you would have said on the very first day of the month, that you wanted to sell 75.5. It was a weekly M3 and a monthly M3. There is no doubt in the world. And it opened up at exactly the price. So can I assume, is it safe for me to assume that bears sold here on the first day of the month? Isn't that nice? So if you don't know how to swing trade, you should be slapping yourself. Slap, slap. Like if you don't know that, you're like, well, what trading strategy is working, right? That's clear as day, right? So we know there are bears unequivocally. There are bears there. Okay. And it drops to a bottom. And we just barely missed the monthly target. So when you sold here, this was your target, and we missed it by a handful of pips. Now, that's very unfortunate because typically you'll stay in until you get knocked out. So that's why I drew the inverse head and shoulders the other day. Last week. We had this, okay, we missed it. And I think I said this big retracement is a big deal because it sets up the inverse head and shoulders, which means we're not going to hit our target. So then I drew the left shoulder and I brought it around, and this is where the right shoulder is, and that's where not only bears will get out, but bulls would buy based on the inverse head and shoulders, which is a reversal pattern. All right, so then we get to Monday or Friday, because if you're a swing trader, you're front running, right? And so on Monday, where do you want to buy as a bull buying the inverse head and shoulders pattern? Somewhere in that gray box. Oh my God! Right. Oh, whoa, wait. So just like we planned, that was the buy zone, and then check that out. Based on that, what's the target? The conservative target is here, and the aggressive target is there. And we already have it coming down off that. Oy vey, what? So now it's gone up, hit here, and because it happened on Tuesday or really it's sort of Wednesday-ish earlier, but certainly Tuesday if you're hitting those targets, you have permission to counter trend if you want. So we have it now coming back down to about 75, I guess that is. No, 70, what is this? I can't see it. Gee whiz, Wayne. 73 and a half. I don't need glasses. I don't need glasses. We have it coming down to about 73 and a half, in which the market takes up to the next step. All this is planned. You notice, guys, we're always talking about what's going to happen tomorrow. Every day we log in and we talk about what happened in the past, and I'm setting up tomorrow. Right? Now, I don't say, dude, you need to sell here. Because if you didn't have that plan, well, you don't deserve it. We did actually talk about it, though. You do have permission to counter trend trade, in particular because of a Tuesday. I said if it was a Thursday, no way. Okay? So anyways, now we're coming back down to here, and maybe today or tomorrow, we'll be buying this around that price zone. Do you understand that that's the secret sauce? That we're looking at the past, and we're talking about tomorrow, and we're not even really concerned about today because we talked about today yesterday. Like, why would we talk about today? You're just making up your trade plans now? And we know that that's the recipe for failure, isn't it? To log in like, I wonder what I'm going to do today. Oh, gee whiz, I think maybe I'll counter trend the Kiwi, I guess. I mean, dude, no way. I'm going to destroy you on the long run. You can get lucky once in a while, but you ain't going to win. Right? Hey, let me ask you a very quick question. Instead of trading against central banks and multinational corporations and thousands of hedge fund managers and thousands of retail traders, tens of thousands, hundreds of thousands of retail traders, would you rather trade against 10 people? If you could, let's say, at least double your money? All you had to do is be in the top 3. So instead of the top 5% globally, you'd have to be the top 30% out of 10. Is that something you're like, yeah, I think I could try that today? And you just have to do it today. No. Yeah. No. No. You think you could be in the top 30%? You know, what if you could be in the top 30% and still double your money or better? Double, so you get 100% return, or maybe 150%, or 250%. And if it didn't work today, you try again tomorrow. PJ, the other level is midpoint psych. So like if you're kicking off an 80-20, you're on your way to 50. Luis would try that, sir. So what I'm thinking, guys, is what if you put $50 in and you versus 10 people, or I guess 9 people, you versus 9 people, you know, let's say third place gets $100, second place gets $150, First place gets $250, but you only put $50 in. And if it didn't work today, we try again tomorrow. You know what your defined risk is? It's $50. You can't lose more than $50. Okay. Yeah, that's what I thought too. Good way to practice, I think, right? Anyways, that's the thing about currency trading too. If you showed up in a room of 10 people, you need to be confident enough that you're like, yeah, I can beat these guys. Imagine you, right? And that I really got that feeling for the first time when I was on the trading floor in Chicago. Not that I traded there. I was invited to visit the trading floor of the Chicago Board of Trade, and I watched these traders, S&P 500, 10-year T-note, soybean, and I watched these traders. First time I actually saw another real professional trader, and I walked out. I was so happy. I was giddy. Yeah, Luis, that's what it sounds like too. But anyway, so I left the Chicago Board of Trade, and I knew for a fact I could whoop these guys. Not just like compete, I can whoop them. They don't know jack. And I felt really good. Anyways, the programmers are freaking out and all this kind of stuff. So anyways, we got things going on for you. So up, 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 down, down, boom. Okay. Right? What else? Well, would it be bearish? Well, the only way it would be bearish is if you were like fibbing it down, but it doesn't seem like, I guess I would draw it this way. But I wouldn't draw it this way for a couple of reasons. Fibonacci is a trend. Are we trending? No, we have a low here. It's a double bottom. So we're range bound. So I wouldn't use a trend here. And even then, I want overlaps, and it doesn't really overlap anything. We are playing the weekly, but, this is a nice little step up. So what I'm thinking is up, down, and then up to here, just like I drew it. I looked at it again, and I'm like, yeah, that makes sense. Okay. Does it mean it'll happen? No. This is the next level of resistance, right? And then you cluster it with that currently. Now, these will change a little bit, but all right. So now what? Kiwi is stronger than CAD. CAD stronger than pound. Pound stronger than Aussie. No, Euro. Gee, can you hear this? People don't like being fired. Hey, it ain't working for you guys. She's fired. No! Get off my lawn or I'll call the dogs! Ugh. So anyways, now we're putting together like trade plans based on strength. Go Kiwi first, CAD second, pound third, Euro fourth, all that kind of stuff. So I think you get the idea. Nice, right? So like if the yens turn weak, I probably want to go Kiwi CAD. And if the yens, well, yen pair, right? Yen, if the yen gets strong, that means yen pairs come down. So therefore, I'd probably sell pound yen and euro yen. So, right? So I'm putting them in order. So I'm hot to go HOTTOGO, depending on if the yen turns strong or if the yen goes weak. Yeah, life is a sketch. Yeah, absolutely. So now life, when the market comes down to your price. So now I'm looking at somewhere around, gee whiz, I can't even see that again. Let me do it again. What is it? 73.5. Yeah. So when we get down near 73.5, so we're at 73.70. So I'd like it to come down a little further. And when we get closer to 73.5, I'm going to drop down into like a 15-minute chart. Okay. And I'm going to look for reasons to go long. Okay. And that's now pure technical, right? I already decided do I want to buy around 73.50. So I'd like it to go down there as close to that pivot as possible and close to that gray area that I drew as possible. So as close to this as possible. 73.53. Okay, as close to that as possible. I'd like to buy it. Okay, so I'm going to be on these smaller time frames, and I'm waiting. And I don't know what I'm waiting for, so I have to recognize it when I see it, which means I have to think about it. So down here, maybe I see a 1, 2, 3, or I see a double bottom, or I see a 5-8 cross, or if I want an oscillator, I see an oscillator move. Maybe I wait for a 21.55 and then catch the next 5-8. All that is all just trigger stuff. Okay? Shoot, you can just buy it blindly and drop a stop. I mean, you can buy it any way you want as long as it's near what's 73.50, right? You got it? I hope that makes sense, right? Most of the time, you are waiting. That's because you're the one in control and not the market. Someone that trades a lot, it's because the market's in control and they're like, oh my God, look at that giant candle. Right? Oh my God, look at that giant green candle. Okay? Oh my God, look at it. Well, someone that responds that way, often you hear that in, around news. People are like, oh, look at the euro dollar's crashing. Just the statement says there's somebody that doesn't know what's going on. Okay. Look at these giant candles. Great, 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 great. What you should be saying is, oh, it's dropping to my next level of support. Cool. Right? Right? You should always be waiting. So if you're a bull and euro dollar is crashing, it's just coming down to your next level of support. And you're like, oh, well, now it's down at 73.00. So down there, I'm going to drop into a 5 and look for a reversal. Right? There's no crashing. There's no amazement. There's no nothing. Your trading should be incredibly boring and straightforward. Right? And in that case, you always have, if you're a bull, okay, let's do it this way, right? If you're a bull, you always, always, always are simply waiting for the market to come down to two different prices. Plan A, plan B. That's it. You're always plan A, plan B. And you know how aggressive you should be because the market's either moving with you, so you're a bull and you're buying dips. Oh my God, free money, right? You're buying dips in an uptrend, right? The village idiot can do that. But what about buying in a downtrend? Ooh, that's tricky. So you need to be a lot more conservative and you have to have better support. And maybe you need, instead of just touches, you need like proper reversal patterns or, a little extra, and that puts you in and then you're cautious and when it gets to the next level of resistance, you should probably just take your money off the table because it's still probably going to come down if it's technically a downtrend. So you're buying and getting out early versus buying and holding, right? So you're making these decisions, but you're always waiting because you're like, okay, right? These are my next two opportunities. Drop down to support 1 or drop down to support 2. And then you wait. Because it couldn't possibly be happening right this second. Because that means you don't have a plan. Okay? All right. We got request for euro dollar. Cool. Okay? What do you think? Oh my God, euro's crashing! Okay. All right, so euro's crashing. By the way, bears are supposed to be short right there. That was the plan I outlined for you guys on Monday. Bulls are supposed to be long here, here and here. This was plan A on Monday, and this was plan B on Monday. You see how I already have it drawn? Why do I already have it drawn? Well, our plan was for it to fall, and then you would buy it. Can you see that? We already planned it out. We have it coming down to here, 115, and you're going to buy it around 115. Right? So could you buy it at 115.33? Yeah, you could. So your plan A could be, well, not on a 4-hour chart here, on a 5-minute chart, if it rolled over and headed up. Because, you can see I have it marked up. I probably did this 48 hours ago, guys. Yeah, you probably could. Okay. So, yeah, you could look for it here. So you could be on a 5-minute chart right now. And you're like, yeah, what's up, Doc? Right? Yeah, if it kind of did this, and then it kind of did this, and then it kind of did this. Yeah, you could buy it there, especially if it was after FOMC meeting minutes and the dollar weakened or something. But the whole thing here is, didn't we just analyze, like, if the dollar weakened after FOMC meeting minutes, isn't the euro dollar like the worst freaking currency pair you could buy? Why not sell USD CAD, right? What was the other one? Why not buy Kiwi dollar? Because we just analyzed them. They're significantly stronger than the euro. Like, it's the last one on earth you would buy, right? So anyways, but you could. And then, and then what if it did this? Then you're like, okay, yeah, maybe then you buy a dip here and all this kind of stuff. Yeah, maybe, right? Sure. That's a maybe. Okay. But step out. Okay. Find out where we are. Okay. The big question here is, what do we do now? Right? Where are we going? Where have we been? So when we sold this price up here, what was our target? That's an R1. So our target is an S1. Can we just say, can we close that plan out? Because that's what it comes down to. What were people planning? When they put $1 billion on this, what was the plan? Well, R1 predicts S1, and we went to S1 and stopped. Can we just write that off the books? So this could reverse up if it wanted to, couldn't it? So you have to ask yourself now, do you want to be the one that is reversing this? Do you want euro dollar to go up? It's a simple question. And if you can't answer the question, don't trade it. Because we need market participants to lift this, right? So if you want this to head back up, and let's say just back to the top of this range from S1 now to R1, there's no reason to think anymore. Then you simply, you're going to look to buy it there, or you're going to look to buy it there. And we had this planned out days ago. And if you were going to sell it, I mean, dude, days ago you were supposed to sell it. And guys, if you're not selling at the top days ago like we analyzed, or waiting to buy it at the bottom like we did days ago, then you really have to ask yourself, why are you not thinking about this days in advance? And if we cover it and you still don't do it, then what's the problem there, right? NP says not going up in my humble opinion. That's fine. And there's not even opinions here, right? There's not even opinions. We don't even care about opinions. It's just bias that I care about. Because if someone says, well, I don't think it's going up, I'm not interested in, nobody cares, right? What's the plan? If you're a bear, that's a bias, not an opinion. You can't just say, well, I don't think it's going down today, or I don't think it's going up today or this week. Well, none of that is important to me. I'm interested in bias. So say, well, what's going on, at the ECB that makes you think that? You're like, oh, I don't track ECB. Good. I'm not interested in your opinion, right? I'm not interested in hearing that anymore, because if there's nothing fundamental about it, then there's no trend, there's no reason, there's no policy, there's no, right? You just got an opinion, and I'm not interested, right? But if you can back it up, then I'm very interested. So what I'm trying to say is the bias is way more important, right? So if you're a bear like you were here, you made money. Boom. Love it. Even if I'm not bearish, that was a perfect trade for a bear. And a bear set it up. A bear took it. Bear hit the target. Nailed it. 3 points. Nothing but net. Right? Nothing but Gatorade. Great. So what's the next plan? Well, bulls want to take it over. Great. So they rallied it up. Great. Bought the dip. Great. So if we turn it up here, that's great. So all you have to do is either be a bull, and we know you're going to buy it here, and we know you're going to buy it there. And if it drops even further, then there's nothing else for a bull to do. Would a bear trade it this way? I don't think so. Maybe they are, and if they do, then we will make lower lows, and they will slaughter the bulls. But once again, you're not going to lose a lot of money, because you have your entry here or you have an entry there. I mean, you have a plan, and that's going to protect you from big losses. So it just comes down to, if you're a bull and you buy where you're supposed to, you'll do all right. You probably won't lose a lot of money. You might even make some money and be wrong. And if you're a bear, you'll do all right. If you sell where bears are supposed to sell, you'll make money. Well, you probably won't lose a lot. Maybe you make a little. But the thing is, you have to buy where bulls buy. You have to sell where bears sell. The opinion stuff, not very interesting. I'd rather you just do it and be right or wrong. And you'll never be very wrong. And every once in a while, you'll be very right. And the only difference is the rest of the market agreed with you. It wasn't your behavior that changed. You're consistent. Okay? You're consistent. You're a bear, and you always sell at resistance where other bears are. And when you're wrong, you'll lose a little bit of money. You might even make a little bit of money. But if you're right and everyone else sells too, you'll do very well, significantly better than your losses. You see what I mean? And that, over the long run, that's where it comes from. You're very consistent in your behavior. You're trading with a bias. You're trading with a strategy. You're trading with your fellow bears, or you're trading with your fellow bulls. And on the long run, you'll do extremely well. And what do the other 95% of traders do? I don't know. I don't know what they do. They're like a baby in bathwater. Bye-bye, sell. Bye-bye, sell. Yellow Lambo. And yet they're not willing to do the hard work. And the hard work is, dude, come up with a plan. What are you going to do tomorrow? Right? That's the hard work. What are you going to do tomorrow? Accurately predict the future. Find your two prices in which you'll consider buying. That's it. Right? That's what you need to do. What's going to happen in the next 3 hours to 36 hours? Well, if I'm a bull, I might consider buying at this price, and I might consider buying it at that price. So now we're kind of near here. So now I got to drop, and I have to wait and see if I get a buy opportunity. Is it possible I do not get a buying opportunity at the price I'm looking at? Is it possible this falls further? I just sit here and wait for an hour, hour and a half, and it falls? And how much money would I lose? Yeah. Well, there you go. And it's because I'm in control. I told the market my price. I have a price. I'm in control of my behavior. I can't control the market, but I can say, hey, I know my price. If price comes down to 115, I'll consider buying it. And if it doesn't, I don't give two hoots. I ain't trading. You see what I mean? And then if I hit my price and I get a high, low, I'm now getting my at or near the price I called in the past because I'm planning for the future. But because now I have a double bottom at the price I predicted, can you see how that reduces my risk now? Reduces my risk. I get a reversal pattern at or near the price I asked for it. I'm like, you know what? I think this is going to come down to 115 and reverse. And then I see a reversal pattern right near 115, like, right? That's when your trading improves. So you can just keep video game your Forex trading, or you can start, refining your trades by planning them in advance and staying in control and reminding yourself that for you to be a success, you need to make decisions. That's how you earn your money. You need to earn your money, not just trading. It's not a video game, guys. I know you got some sales pitch from some get-rich-quick scam artist, but this is a true career for professionals. Okay? So you get paid, you earn, your value add to the market is that you've analyzed the market technically and fundamentally, and you've made decisions. And then you wait, and you get your price or you don't get your price. Therefore, your risk is defined, and your reward, technically speaking, or fundamentally, or whatever it is unlimited upside. You never have to get out, right? If you buy pound yen because it's bullish, you could let that run for the rest of your life. Think about it. You could be in that trade for 25 years. Okay? So you have limited downside and unlimited upside potential. And that's cool. So anyways, have a wonderful trading day. Remember, if you want the templates, they're just in the description below. Click the little link. It works for most people. About 70% of the people have no problems getting it. So I'm working on the other stuff. Please subscribe. Please like. Please leave comments. They are important, and I do read them. Okay? And if you need training, fxbootcamp.com. All right? So thank you again for being a client of Traders Way. We appreciate you. We care about you. We want you to succeed. And I don't think your last broker did any of that, right? We care about you. We want you to succeed. And I look at this as an investment into you up front. So please pay it back by choosing us as your broker, okay? Take care, guys. See you tomorrow.